Good morning, everybody. Welcome into Mining Stock Daily. Trevor Hall here, your host once again for a special long-form episode to end a very eventful week, a historic week. Listen, huge moves in the equity markets on Wednesday. What does this all mean in the grand scheme of things? What has the about shift in the tariff policy meant for trade going forward? And if it was broken, is it now fixed? All these big questions that leading about, talking about the global economy, global trade, and if things can get back on track here. We welcome in the one and only Shrub for the big conversation. And really, what does this mean for emerging markets? What does it mean for Europe? What does it mean for precious metals and gold? So a number of different directions we take this conversation with Shrub, a really important one because, again, historic week since last Wednesday on Liberation Day, and then also some ramifications on the bond market. So as you can tell, there's a lot of different talking points him and I tackle in this episode. Special thank you to Vizsla Silver, Caliber Mining, and Integra Resources for their continued support of Mining Stock Daily. And as always, please like, subscribe, and share, whether it's on the YouTube channel or also on the podcast networks where you do receive Mining Stock Daily feed each and every day. All right, everybody, important conversation, as you can tell. Let's lead into it with the one and only Les Shrub. This interview has been scheduled for, I don't know, maybe a couple months now. So how fortuitous of timing to have the Shrub back on Mining Stock Daily, where I promise you we were not going to talk a whole lot of mining stocks. But the Shrub, man, good to see you. I can't think of too many other people I'd want to kind of have me pull me back off the ledge than you this week.
Thanks for having me back, Trevor. It's indeed like a great time, busy times, but it's a great time to be doing this with you.
Yes.
And it's always like a turning point. So we could even talk about mining because there is something to talk about there. But let's keep that till the end, I think.
Yeah, well, that'll be the carrot for later in the episode. I was actually there's obviously a lot of directions I want to take the conversation, Shrub, but a little bit what I was thinking kind of in preparation for this discussion actually is a conversation you and I had back in London. We had, dinner with a few friends. That's about the one time a year I get to see you, actually. And you and I were sitting across the table from one another. And obvious, like this, I think it was back in October, but before the election. And you and I sat there expecting a Trump win, a Trump nomination to go on as president, and really what that meant for the macro side of things. And I sat there and I'm really more focused on the mining stocks, the metals and that type of side. But I had a macro moment and I said to you, it's like, Shrub, I really think the U.S. in the next 6 to 8 months is going to have one of those Liz Truss moments where the bond market just throws a fit based on policy out of the administration that be. So the Trump administration, obviously the case for that. And it's going to be probably on the increased tax cuts that he wants. And I just feel like the bond market's not going to have it. Well, I guess you agreed with me. Like you and I sat there and said, yeah, we're thinking the same way. But we were, I guess, mostly right. But it wasn't on the back of, well, maybe partially on the backs of proposed tax cuts. But it really was the tariff news that really brought this into place where we almost had a Liz Truss-like moment in the U.S. bond market over the weekend and into Wednesday. And so I think about that conversation. I've been thinking about that conversation fondly, Shrub, for the last few days. And it's like, man,
laid out,
you and I were almost hit
we were bullish into it as well. I'm pretty sure we were saying we discussed prisons like Geo Group and Fannie Mae and saying, oh, Trump is going to be great for a lot of things. And then, but at some point, you're going to have a Liz Truss moment, maybe after the inauguration. And then here we are. Yeah. We're having the Liz Truss moment. But like you said, for the wrong reasons, which, to be honest, that moment was going to come anyway, I think. And it begs the question if, this whole tariffs sometimes, it's not a distraction because that's part of the grand plan, but it's kind of like bringing forward that reckoning. Let's put it this way.
The reckoning came with an about-face turnaround from the administration on Wednesday.
Correct.
They had to backtrack, and obviously there's been some reporting that Treasury Secretary Bessent had to have a long conversation with President Trump on Sunday night to show him the risks here. And so that that about face happened Wednesday, and all of a sudden markets just had this incredible rally here on Wednesday. The S&P soared 9.5%. The Nasdaq was up 12%. Dow Jones was climbed nearly 3,000 points, and all of a sudden optimism's back. We're back, baby. But what is the level of concern? What is the level of concern we have here moving forward?
Look, if you want to take a step back, as you know, I write I write my trading journal, which is more like a parody publication, which I call the Reminiscences of a Shrub Operator. So that I kind of write it as a form of therapy. And this week I've been writing every day as a way to just keep calm and carry on. So just to take a step back on that, I penned this phrase called the penny bond promoters. And actually, this is why I was really excited that we're doing this together, where I talk about the penny bond promoters for the first time, because you're one of the best mining guys out there, and you've met your fair share of penny stock promoters. I've met my fair share of penny stock promoters. So I really wanted to do this one with you. And I'm sure a lot of your listeners are like, oh, this is interesting. Where is he going with this? Like, we started talking about bonds and now we're talking about penny stock promoters. But here's the thing. Let's make it a little bit fun, because it's been a tough week. So
welcome.
So welcomed. I mean, I've met penny stock promoters in mining, biotech, SPACs, and to be honest, it's kind of like same shit, different industry in many ways. So, but the mining promoters, they're kind of more easy to figure out because the biotech promoters have PhDs and they're fancy and they wear a tie. Whereas, the mining promoters are always like, this is the best project ever. It's like, this is a deposit. It's worth $1 trillion of rare earths. And it's in, an African country you've never heard of, or Greenland, or I don't know, like, just figure out the country and it's going to be there. And it's worth $1 trillion, and we're going to raise 100 million, and it's going to be worth 10 billion, and then we're going to sell it to the Chinese. And it's always like, it either doesn't work out, or if it does work out, it just gets seized by the country that you're in. So, right? So it just never works out. So, look, and we've had our fair share of penny stock promotions with SPACs, so I think people are familiar with that. So why do I bring this up? So the reason why I bring this up, and that's how I put it in my head in the last few days, and it actually helped me a lot, was this master plan that we've been presented so far. It seems like a penny stock promotion. And it's what I mean by that. So, here's the plan. The plan that we've been presented so far is, well, not that we've been presented, but the implicit plan was like this. We don't care about, Bessent comes out and says, we don't care about Wall Street. They've had it good. We care about Main Street. We don't care about the equity market. We care about the bond market. And he's been saying that for a month, okay? So let's put a Shrub translation to that. That's like Bessent saying, you're not buying my bonds? Okay, I'm going to force you to buy my bonds. I'm going to burn your equities. I'm going to smash them to the ground, and then you're going to buy my bonds. You're still not buying my bonds? Okay, I'm going to kill the economy, and then you're going to buy my bonds. You're still not buying my bonds? Okay, I'm going to kill their economy, the foreigners' economy, and then they're going to buy my bonds. And then I'm going to kill global trade, and then I'm going to make them build the factories here. And then after we have a recession, I'm going to get yields down to 0%. Then I'm going to refinance $36 trillion worth of bonds in one go. I'll just do a placing with Cantor or Jeffries or Goldman. I'm just making things up. Huh? And then after we refinance the whole debt at like 2%, we're not going to, or, from 5, we're not going to be spending $1 trillion or 2 trillion of interest payments a year. We're going to bring it down to nothing. And then we're going to cut taxes. And then the economy is going to boom and we're going to be back, baby. We're going to be like so back. Okay. So you listen to all that. And this is like just my parody way of presenting the plan so far. And it's like, that's like a penny stock promotion, but I call it a penny bond promotion. So they're like penny bond promoters in what sense? Like, I'm just being very, I'm trying to be funny here. Like, I'm not, don't take this seriously, but the plan that's been presented until Wednesday was just too childish. It was just like too easy to see through. Because with all that that I've told you, with the tariffs, with the smashing of the equity markets, bonds should have rallied to like the 10-year should have been at 3%. And instead, it was breaking above 4.4. So the bond market wasn't having any of that. The slowdown of the economy, the slowdown of the puke of the equity market, there was no flight to safety in equities. And that's very, very concerning. And flight safety in bonds, and that was very concerning. And then yesterday, when Trump made the flip, it wasn't accidental. There was no 4D or genius move.
No.
What forced him to do the move was the bond market, because the bond market is the biggest and strongest vigilante out there. If you want to get something done, you let the bond market to do it, right? So the bond market is what forced him. So even Trump himself, he said that he heard Jamie Dimon, and Jamie Dimon obviously is very well respected, and he raised the alarm. And credit to Trump, by the way. The difference between Trump and another politician is that Trump is a businessman and he knows about distressed debt. So he actually listened, because if he actually reacted, and that you got to give him credit, because they reacted on a day when bonds were puking, and they didn't leave it longer than that. So you have to give credit to Besson, you have to give credit to Trump, because they did react yesterday. But we have to just say, what triggered that reaction of the pause was the bond market. That's what triggered the move. So now here we are, a day later, and the bond market actually, the only thing it did is stabilize. So we're not clear. And then a day after it stabilized, Trump is back today and he's talking that he's working on the big plan and it's looking great about doing the biggest tax cuts Americans ever saw, or whatever he said. So now we're back to the penny bond promoter scenario that I said. It's like, no, take a step back. Mr. President, just calm the bond market first. Let things settle. Get the economy back on track. Get your tariffs in order. And then start talking about the tax cuts, because you don't want the bond market to be spooked again. It's only been one day. So that's why I'm still scared about this Liz Truss moment. But I think so that's not something that we should be we shouldn't be comfortable that things are over. I don't think we're even halfway there yet. And if I just take a step back about yesterday's move. So yesterday's move was the biggest move ever or something. So the S&P had a plus 10%, the Nasdaq had a plus 12%. So I went back today, I just wrote, I went back to write in my journal the biggest days ever. So here are the biggest days ever.
Yeah.
October 1987, October 2008, March 2020, and in the Nasdaq's case, the best day ever was 3rd of January 2001. So let's just go now and look at the forward returns out of all these days.
Or those are the biggest losses or the biggest gains?
Yeah,
or just the biggest wins.
Largest daily gains were in October. I'll tell you the exact days. It was like 13th of October 2008. And 10 days later, the market was down 15%, as you remember.
And these are just recent because because I did the same thing last night, and I saw bigger days back during the
I skipped the
Great
Great
Depression,
Depression.
like
Oh yeah. Tell me.
1933.
Yeah, I looked at the
Okay,
Great Depression. I just left them out, but I want you to tell them later, actually, because it's worth discussing. So I looked
sure.
at October 13th, 2008, and it was 10 days later. It was so the market that day was up 12%. 10 days later, it was down 15. 28th
Right.
of October 2008, it was up 11%, and 10 days later, it was down 4%. 24th of March 2020, it was up 10%. 10 days later, it was up 9% because that's when they flipped. That's when they did the infinite QE. And then 13th of March 2020, COVID, it was up 9% and it was down 6% 10 days later. And then even the 1987 crash, we had on the 21st of October 1987, we had a 9% move. 10 days later, we were down 3. And the worst one was actually the one that I think is quite relevant here is the Jan 2001. So in January 2001, it was like the best day in the Nasdaq ever, and yesterday was the second best day ever.
Mm-hmm.
The forward returns out of that one was down like a 50% drawdown within a year. So, these bear market rallies are very wild, and it actually scares me. I'm going to tell you a stat that I literally just saw it, and it's actually hard to believe. Let me just pull it up. So the biggest. So yesterday I was. Let me just put up. So yesterday, Goldman's strategists, they started the day. They shifted their baseline. You're gonna love this. So 1 p.m. Eastern time, they shifted their baseline to a recession baseline. Okay. 73 minutes. So then Trump comes out with the pause. 73 minutes later, Goldman's economics comes out and says, we're reverting to our previous non-recession baseline. Dude, it took them 73 minutes. Now listen to this because, dude, honestly, I do this for fun. Like, Shrubstack is a parody publication. I'm on Twitter just to have fun. Dude, these guys are funnier than me. like, like I'm trying to be funny.
Yeah. They're doing it effortlessly.
This is the funnier part. And actually, it's funny, but it's also stupid. So yesterday was the biggest buying day of hedge funds ever, according to Morgan Stanley. Biggest buying day ever. And then they switched their net exposure, went up from, I think it went up to 49%. So they increased their net exposure by 10% in one day, which was the biggest increase in net exposure ever. So you have the smart guys. I mean, like the Goldman's guy, credit to them. They're very smart. I'm not saying anything. They're very smart. The Goldman's guys are very smart. And this is a zeitgeist. I'm just mentioning them as a zeitgeist just to see where people are. So you have the super smart guys, some of the best on the street, actually, the Goldman's strategist. And then you have the smartest hedge funds in the world. And the smartest hedge funds in the world were buying yesterday on a plus 12% day when history tells you maybe you shouldn't be buying, because what are you actually buying here? I was.
It's the hopium. It was
Yeah,
hopium.
it was hopium.
Shrub.
You're just buying hopium,
right? It's rinse and repeat. It's the way it's been for the last 20 years. You buy the dip because either the White House or the Federal Reserve is going to come in and save us.
Yeah.
So why not? It's worked for the last 20 years. Why wouldn't it work on, April 8th, 2025?
But here's the funny thing. Retail were big buyers. And, one thing I really do appreciate is, I didn't have much, I wasn't much in contact with retail investors until I joined Twitter and started writing. I have to respect retail traders because, they were the biggest buyers in the last few days and people were making fun of them. Oh, retail is buying. It's like, dude, retail was buying the lows. You monkeys that run the actual funds, you're buying the highs. Like, seriously. I really think because the game is structured in such a way, like these guys yesterday, they were panic covering shorts. They were panic buying because they have to play the game. They're like, oh my God, I'm going to underperform. And then you look at, long short performances. They're just tracking the S&P. It's actually quite worrying. So, the gross exposures of hedge funds is still at the highs. Just when things are looking really, really shaky. I mean, let's take actually one step back. So let's say Trump does a deal with Europe and Japan, which I think is very likely, by the way. He kind of burned bridges with China in a big way, right? So,
he's trying to walk that back as well.
So, I don't know. I'm kind of like it's a zero DT market. So, don't take my word for it, but the way I survive in this market is I just, I own the stuff that I think are cheap. And I just trade, I sell pops and I buy dips, and I just try to make a living doing that. I mean, I don't think there's anything smarter than that to do. And I actually want to talk to you about let's bring the mining part in the conversation, actually, because I saw something interesting on this. Ivan Glasenberg, who's undoubtedly the best mining investor executive of the last few decades, he was buying. He pretty much put Glencore together. I've met him a few times, by the way. He's amazing. He's such an impressive person, and he likes to buy cheap. He likes to buy dirt cheap. If you see the coal deals he's done in the past, you're like, this is the best deal ever or something. So he hasn't bought any stock in Glencore since 2015. And he disclosed a couple of days ago that he went from 9% to crossing 10% in Glencore. So he put like more than $300 million to increase his exposure. Now, when Glasenberg buys stock, I don't really care about anyone else except Glasenberg. When he buys stock after 10 years, you have to pay attention.
Sure.
So I think, I had this conversation with my buddy Paolo, Paolo Macro that you've met. We're just talking about commodities being the trade after the trade. So after all this blows up, I really want to be buying commodities, but I'm not sure I want to be buying now if we think that China could go in a recession. Having said that, there's still the great unknown. Does China stimulate at the same time? Because, that's one way that China counters this. So, look, Glasenberg is obviously, like I said, there isn't a better indicator there. So I think Glasenberg is playing for the trade after the trade already because, his firepower is way bigger than any one of us. So he has to start buying anyway.
Oh, come on, Shrub. You're up there. You're up there.
So basically, I think it's something to keep in mind. Like, things can go badly. Like, for example, you and I remember very well what happened in the Chinese devaluation, which was when Glasenberg was buying last time. So that's the day there is a possibility that China, so there's only A or B. So A, China devalues, B, China does a stimulus. A is very bad for commodities. B is very bullish for commodities. So you're.
Yeah. I think there's a little bit of concern there which direction they go, and that, I mean, it's well beyond my pay grade, Shrub, so that's why I'm here asking the questions, because I'm not certain where that goes with China. I do think in the broader scheme of things, what the hand that we've been played potentially brings not just a Chinese or a U.S. recession, but a very severe global recession just based on the functionality of trade and economies together. I mean, both those administrations, the Trump administration and President Xi and and the party. There's nothing here been in the last 24 hours that makes me feel like, tensions there are decreasing. In fact, I'm just kind of, I'm almost, the weekend is almost fearful, knowing that we could go look at futures on Sunday night, leading into the Monday trade, and all of a sudden China has weaponized their treasuries, U.S. treasuries once again. And here we are back into a moment of destabilization on top of increased tariff rhetoric from both countries. I know the market was rallying, things were settling down on the other, 78 countries we are negotiating with tariffs. But the fact that we are increasing the tariffs on the number one trading partner and number two economy in the world just has the potential of bringing the whole house of cards down.
I mean, look, that's why it's really black and white with China, unfortunately. Like they could seriously devalue the currency at any point. I wouldn't be surprised. But they could also just do the stimulus. So it's really, we are at such a crossroad that I really find it stupid to have a strong opinion either way. And that's why I respect you for saying, like, it's beyond your pay grade. It's beyond my pay grade as well. I really don't think people should be betting on A or B in a big way. I try to have like a barbell approach. So, just buy cheap stuff that would benefit if A happens, and, have some hedges that would benefit if B happens. But I really think that, only Xi knows and only Trump knows how he's going to react. And to be honest, I don't even know whether Trump knows yet, because, he's a very instinctive poker player, right? So that's the whole risk in the situation. Look, this thing with treasuries, I really think people underestimate that impact still. And I'll tell you why they do it. And that's why I coined this term, the penny bond promoters, which I don't think many people grasped. But, my friends who trade credit, they really picked it up. Bonds have been held up by, bonds have been a consensus long because people like you and me think that we are risking global recession. So I actually think we're risking global recession. If this if this tariffs play out as intended, we will have a global recession. So people's instinctive reaction is global recession, buy bonds, right? That's the reaction function. So there's a lot of people, I see them on Twitter as well, they're coming in and they're saying, yeah, you got to sell equities, buy bonds. And then you come into a day like yesterday, NASDAQ is up 12 and your bonds are unchanged. So on the upside, they don't work. So you would expect them to work on the downside, right? Nah. On the downside, they still don't work. Like today, they're down as we speak. So the problem is bonds are not acting as a safe haven. And this is very, very concerning going forward. But you have a lot of longs who own the bonds as a hedge for recession. And they hope that hedge will work in a recession. And so far, it's not happening. And actually, I don't think it's going to happen for the very simple reason of how you started the conversation and how we discussed it in September, October 2024 in London. It's a Liz Truss moment. It has nothing to do with using bonds as a hedge. It has everything to do with thinking of bonds as a safe haven, not as a haven against recession. And bonds are no longer being thought as a safe haven.
I think part of this conversation is also dealing with the how do you like the trust
100%
factor.
is about
the trust factor of the U.S. financial institutions. And this has not just been new for the last week or 6 months. This has been ongoing since 2008, if not longer. But the global trust factor of the United States and its financial institutions has been dwindling. There's been cracks in the system for a number of years now, but it seems like in the last year it really has gone downhill. And now we're at this moment where if your biggest buyers of your debt don't trust that it's going to be worth a shit, then why would they buy more? Why would they buy your bonds?
Why? Because there is no, and I wrote this this piece called "The End of American Exceptionalism," and I basically said that the end of American exceptionalism as a concept for me, it got triggered after the Trump-Zelensky meeting, and people took it the wrong way, but here's how I took it. When you're a European fund manager and a European politician looking at that meeting, the politician says, oh crap, I can no longer rely on the US for military assistance. So the European politician panics and goes, and the Germans did that, by the way. So the Germans vindicated my view, because what did they do after that meeting? They went fiscal for the first time since 1990. They did a fiscal package of €1 trillion, including €500 billion for defense. So the European politician panicked after that meeting. Now the European investor had the same reaction, and they're saying, oh crap, do I really, if they are telling us they're not going to watch our back, which I don't blame them, by the way, even as a European, I don't blame them. I don't blame Trump about this. But the investor is like, if they're not watching my back, I need, and if Germany is doing fiscal, then my capital should go where it's treated best. So why would I keep my capital in the US that wants to do the Doge and cut costs and restructure its economy, when I can just go to Germany, back to Germany, and invest my money there? So, I visualize this fund manager as someone called Klaus, for example. Klaus is sitting in his office and he's panicking, and he needs to repatriate 100 billion out of the US back to Europe. And, we've seen that. Like, there's articles that came out afterwards. There was one Klaus, which is actually, his name was Karsten. He was running like the Danish pension fund. And he actually said it, like, we are selling US, we're buying Europe. So we have to do it. And so this is a big flow of capital out of the US into Europe. And forget about the Asians. The Asians are doing the same thing, but the Asians have been doing it since 2020. That's the difference. Whereas the Europeans have just started to do this. So Klaus is panic selling US, and Klaus is long a lot of US treasuries as well. So he's selling that as well. And he's bringing it back home. So when you look at the euro spiking, you have to think about what's going on there. And the way I help people visualize it is, you have to think that it's Klaus selling his US dollars to buy euros to bring back the cash home. And that's why there's been such a strong outperformance of European equities versus US equities, and of the European currency versus the US currency. And by the way, this is a major trend. This is not like a 1 week thing. This is a major trend. Can it last 4 years? Maybe it lasts 10 years. You don't know, because here's a scary number for you. So the flow of European funds into the US, about 10 trillion euros went from Europe to the US since COVID. So the Europeans own about 17% of the US market. We're not talking about small numbers here. They own 17% of the US market. So you have, and people, argue about this point, but whatever. It's I'm a practitioner. I'm a trader. I don't want to be, I don't want to be theoretical about it. So I see European flows out of the US. I see them. I don't need to theorize about it. Like, I see them out of the US back into Europe. And this is a trend that's going to keep going for a very simple reason, that the portfolios are so unbalanced. They have been so unbalanced since the beginning of, well, for the last few years, that they're going to take a while to rebalance. Anecdotally, I was sitting with a few private bankers, and they were, I asked them, what percentage of your fund of your European clients' funds are in the US, and they said roughly 70%, and they were unhedged on the currency. So imagine you're like a European pension fund, and you have 70% of your assets in US equities, and US equities are down 10% on the year, but the euro is also down, the euro is also up 5%, that means you're underperforming by 15% on the year. So you're really screwed. And that accelerates the whole repatriation of capital. And that's the whole thesis about, just one way to visualize the end of American exceptionalism is basically that the money's coming back. There's a global repatriation of capital that's happening as we speak. And those things got accelerated by certain things. Like I said, the Trump-Zelensky meeting, but also the tariffs, right? Because the tariffs are an accelerant as well. And also, the German fiscal plan is a big accelerant. And now if China does fiscal, that's going to be another added element to it. So, China has been doing taking fiscal measures for a while now, but if they do more, you will see more capital going there, especially if any deal involves, any trading deal involves China down the line, which, who knows?
Yeah. I think it's pretty apparent that the Trump administration has done an incredible favors for the likes of Europe and Canada and even South America with this repatriation. I mean, they've gone out there and have not held anything back. I remember J.D. Vance's speech at the Munich Security Conference, and I think that was a moment where things were like, oh, well, if Europeans are really going to kind of take back some of theirs, they're going to need fiscal, and I think that was a big eye opener for that. And I don't know if I doubt that was that's not what the intention was with the administration with that speech, but it certainly kind of lit a fire behind it, and also the favor that they've done the Liberal Party up in Canada with Mark Carney and made it harder for Pierre Poilievre to make a nice good run at the prime minister role in that country. Obviously, that's kind of had ramifications. And I do want to talk to you about South America because it seems like there's similar trends there with what's happening in Europe, but on the likelihood that even some countries in South America continue to grow as well. Not only repatriate capital, but also find further investments in kind of those emerging markets. I think I don't know if the Argentina play it's not done, it's not played out, but it certainly kind of seems like fourth, fifth inning in Argentina. But the likelihood of Brazil or Colombia, Peru, Chile potentially, it's a unique perspective. But what are some thoughts on South America? I mean, could you see that kind of regaining momentum specifically after, say, commodities start making a run again?
I'm actually really bullish on Brazil for many reasons. So let's just take them all one by one. So I think the end game in all this is that the dollar devalues. So I think that's how it ends. That's why you can't be bearish commodities in the long run. They could puke on China, they can do whatever. But if you're bearish dollar, you have to be bullish commodities. That's number one. If you're bearish dollar, you also have to be bullish emerging markets. Now, the one country that has suffered on that is actually Brazil. It had a lot of outflows. Literally, the local managers got decimated. Even this year, at some point, Brazil was up 16% on the year. It's still up on the year, but at some point I was seeing it's up 17%, and there were zero inflows into the country. Meanwhile, all the managers, were getting outflows, and all the money has been parked in government bonds, so no one really owns the market. Now, if there is a Mar-a-Lago Accord or something like that, countries like Brazil are going to fly. That's number one. And add on top their commodity exposure, the local industry is going to do well. Add on top that rates are like 15% or something stupid in Brazil. So rates are going to come down. That's going to benefit the local economy. But more importantly, unlike Argentina, Argentina has Milei, so that's why everyone is bulled up on Argentina because they have the right government. But, everyone hates Brazil because of Lula. And that's why I love Brazil here, because there's an election in 1.5 years, by which point Lula's going to be out. I mean, he's not a spring chicken. and he's not even liked. So, I kind of want to be early. The country pays like a 8-9% dividend. The whole index, so the index pays like an 8-9% dividend. So I just own the index and I sit on it because I can't remember the last time I bought a stock market index that pays me like a 9% dividend in dollars. so
this is the iShares.
Yeah, the iShares Brazil ETF is like the EWZ. Yeah. This is not financial advice. This is a Shrub talking. So, right. but I kind of like trades like that where, assuming the dollar gets kicked in the shrubs, plays like instead of being long copper outright, I can be long a whole country that's more diversified, and that's how I get my upside from a weaker dollar. Because, dude, this is at the end of the day, the key trade is to understand the dollar, and I really think the end game here is that Besson wants to put everyone in a room and get them to devalue the dollar by like 10% minimum. And 10% is like, wow. I'm being optimistic because in reality, the last Plaza Accord, it killed the value of the dollar by 50%. That's why, my last few write-ups and, journal entries, as I call them, they were always mentioning what I'm really concerned about is I don't really care about the stock market being down 10%, being down 10% or whatever, because I don't own any Mag 7, which I call Bag 7 because they body bagged everyone. I worry more about the wealth destruction that could come from a dollar devaluation. That worries me more than the rest, because the rest I can manage. I'm a trader, I go in and out of stuff. I don't really care. But the dollar devaluation, dude, that really wipes wealth off the of the board. And I've lived in Cyprus, Greece, even the UK, by the way. So like in Greece, I saw the drachma. Well, before the euro, the drachma was like toilet paper. The Italian lira was like toilet paper. The British pound, after Brexit, it became toilet paper. Like when I was in London, it was a 2-to-1 to sterling dollar. Now it's 1.3. So I reckon the US had a Brexit moment post-Trump. And when I say Brexit, is like in the same way that the UK wanted to decouple from Europe, it looks like the US wants to decouple from the rest of the world. And decoupling is actually very bearish on your currency initially. Now, the UK is kind of like an emerging market in many ways. I say this in a loving way. Whereas the US is the reserve currency of the world. So it's kind of a different setup. But in the case of the US, I just feel like it's almost like they're telling us that's what they want to do. I feel, yeah.
This administration
I feel
is
they're
absolutely
telling us that this is what they want to do. So who am I not to listen?
The questions I have, obviously forward looking, this is obviously what they want to do, and we've seen the consequences of trying to do it too fast, too quick, without much of a linear strategy put in place over the next few years. We'll have midterm elections next year. We'll see. That's a long time. That's 18 months, so at least 18 months. So we'll see how things happen there. But even if, let's say, Trump absolutely just destroys the economy, not just the U.S. economy, the global economy. He's done. And so what happens the next presidential election? And let's just say, again, this is very far thinking, but let's just say a Democratic candidate makes a run and wins in 2028. How much momentum from the populace is there to continue to move these strategies forward, albeit in maybe a better manner that's like it's the better communicated? You can see the path forward to get to whatever end game it is. How much of that is going to be there that the Democrats would actually like, okay, we can win the White House as long as we kind of take some of what Trump has done and see it forward, only put our twist in our way of doing it. or would they win and be like, nope, we're going back to globalization. China's our best friend. Spend fiscal up the wazoo, complete, and you destroy the dollar that way. But yet you have the fiscal stimulus to keep everybody happy. 401ks are back, yada yada yada, and it's just what happened. The past is the past. We're moving forward. Although you're kicking the can
Trevor,
down the road.
This is the big problem that I see here. The big problem is what Trump wants to do is actually very good for the US. His grand idea is actually very bullish for the US, and I hope it's
agree.
fantastic, and I really hope as a European that we had someone in Europe that came and did the same, and he would say, look, what he's saying is it makes total sense. We killed manufacturing in the US and in Europe, by the way. Bring back manufacturing home. And in Europe we killed everything, dude. I mean, in Europe we killed manufacturing. We killed energy. We killed nuclear. I mean, nuclear was one good thing we did. Gazprom financed all these NGOs in Germany, and they killed nuclear. I mean, it's really disgusting what's going on here. So what Trump is doing. Oh, and we have a big immigration problem in Europe, like a very big immigration problem, and no one talks about it because in the fear that they're going to be branded racists. So it's really just off the charts. So what Trump is doing on the immigration side is very correct because he wants to bring security to his people. What he's doing on the manufacturing side is very correct. Now, the manner he did it is obviously wild, and that's actually counterproductive, with the blanket tariffs with the high starting point. But obviously now he's brought them down already to 10%, and I reckon they're probably going to settle at 10, 20% anyway. And Besant's plan was a progressive tariff plan, which I think is what's going to happen in the end. So, you do 10% a year. But to summarize, his grand plan actually makes a lot of sense and is very good for America. Let's start with that. But imagine now you are Apple or Intel. Well, I mean, that's a bad example because, let's say Nike versus a tech company. If you're Nike, you're still not going to bring your factory in the US because you're not going to find like a 500,000. They have 500,000 people in Vietnam in a sweatshop doing sneakers. You're not going to find 500,000 people in the US. So that's not going to happen. But say you're a tech company and you actually really want to come to the US. How long is it going to take you to build a plant in the US? It's going to take you like 8 years. I mean, you know how long mines take. To build a copper mine, you need like a decade nowadays. So to build a factory, to get the permits, to get things done, you're going to need like, say, between 5 and 8 years, depending on the complexity. Now, by that point, there's a new administration. And you're going to be like, well, do I want to build a plant today to avoid my 30% tariffs or do I want to just sit it out and wait for 3 years when the Democrats take control? Because it's going to take me 5 years anyway to build a factory. So why waste my capital? And this is the problem that's happening here. The problem is Biden did something and Trump does the opposite. And that's been on the space of 4 years. So, but the problem as an investor, it's easy because we switch out on a daily basis. But as a real investor, like a capital allocator, you're like,
right.
Well, hold on. Why would I allocate my capital to build a factory in the US when the other guy told me this and this guy's telling me that? So it's impossible for a corporate to plan ahead with something like that. So what the US needs is they need certainty. And, you can only get that certainty with something more robust than a wild swing. You need something more stable than that. And, I don't know how they're going to do it. I'm just saying, I just trade markets, but what I do know is that the corporates are actually echoing that feeling. I mean, here they don't even know what tariff they're going to get charged. So imagine like if they don't even know what tariff they're going to pay in a week's time or a month's time, how do you expect them to come and invest in your country $10 billion that you need to build like a factory, a chip factory or whatever it is. So even now, like just to give you another example, I was reading that there was a factory, was going to cost $300 million. It was going to be built in the US, and they canceled. So the exact opposite of what Trump wants. They canceled the factory. Guess why? Because the raw material cost and the industrial equipment required to build the factory were imported. So they're like, we thought it was gonna cost us 300 million, but we don't know how much it's gonna cost us now. Could be like 450.
Yeah.
So they canceled the factory because, guess what? Guess where all the industrial equipment are made? China. So, dude, it's all a joke.
Right.
That's why this thing is kind of like, it's great as a concept. I really think it's the right idea, but the implementation has been wild. And also, I really think what the US needs to do, they need to give that certainty to people. I mean, the IRA was kind of like giving away free money. So it was a bit like on the other side of the spectrum, but it made corporates feel comfortable to come in and invest because they were actually given the money. You know what I mean? Like they were thrown money and they took the money and they invested the money. So the IRA worked, although I actually think it was like, was fiscally responsible in many ways, right? Because they were financing a lot of nonsense projects, but it was an easy way to lure corporates in the country. Whereas now you're telling them, if you don't invest in the country, I'm going to put you 40% tariffs. So the other side is saying, okay, but what's going to happen in 3 years? And you can't tell them, can't tell them that because you actually don't know. You actually don't know what you're going to charge them in like a month's time.
Yeah. I think I agree with the grand goal of this whole thing. 100% support of, as an American, like, this is where we need to go. I mean, the economy, the manufacturing, all that has just been in shambles my entire life. I'm 40 years old, and so coming out of Reagan as kind of understanding what was happening, like, I've never known where manufacturing is actually building. Growth has always been of hyper financialization for most of my lifetime. And so I understand, I completely support how you get there. I think as they've lost very quickly political clout, like what they, in hindsight, it's always 2020. I totally get that. But instead of, because Trump has to have his name on it, his brand in every single deal, whether it's building a building or negotiating trade, what could have happened, or probably what should have happened, was actually clear communication to the American people. Like, this is the end goal. Here's how we're going to get there past my last term as president. And so not only are you putting kind of a pathway forward and showing the challenges that people are going to be faced to get there, because everybody's on board to the end game, no matter what. Not only do you do yourself a favor of getting through those rough times, but you also establish, some political power for your party. So whether it's be J.D. Vance next or whoever wants to run the Republican Party, at least you have something to build over somewhat of a longer legacy of the Republican platform. Not just a last 4-year term under Trump, which is built anxiety on the back of ego. So there is that, and I just wonder. I'm just kind of curious how much has just been wasted, because it's just been swinging from the hip with all these policies, and we go from one headline to the other in a matter of hours, and because of it, we've lost trust. We don't know where we're at. It's confusion. There's all these things, and now you're just kind of on the brink of destroying it all in the name of God knows whatever happens in the end. That's not a question there, Shrub. It's just kind of me thinking.
But you're right, man. And look, I really hope it works out, because I actually want the US to show the way to the Europeans. And in fact, I have to say that the Germans have done it the right way, because the Germans, it's like the ant and the grasshopper story. The Germans had a very low fiscal deficit throughout, even during COVID. So their debt to GDP is 60%. And it took Trump to get them to say, you know what, time to ramp up spending. So it's been a coalition. They did a coalition, and it's the coalition that approved their biggest fiscal spend since 1990, since the reunification. So that's why I think if you have a national emergency, you need to get everyone together. And the Germans have done that. And that's why I'm actually bullish Germany for the next few years, because I know they're going to, dude, these are the Germans. The Germans don't mess it around. Like, the Germans said they're going to do it. They're going to do it. So you're going to have years of fiscal spend in Germany, and they will be rebuilding. They will be rebuilding their manufacturing. They say it's about, building their weapons and all that stuff, but they will be rebuilding the rest of the industry alongside. So that's what the U.S. needs, man. The U.S. needs like a bipartisan agreement for all these things. They have to just sit and say, look, you want a factory
they need incent.
Yeah.
Sorry, I mean, I'd rather what's missing here is the incentives.
Yeah.
Not strong arm tariff incentives, but like permitting reform, fiscal type of, I don't want to say stimulus, but at least, push on the fiscal side to bring people here, labor reform, like all these things, like just, actually showing incentives rather than trying to strong arm your way into being competitive in the manufacturing, I think was a huge mistake.
I agree.
So, hey, I know we only have a few minutes left, Shrub, but and we briefly talked about the miners and gold, but like gold is outperforming almost everything, just not this week, but like for a while now. What is gold's kind of role here through this chaos? I mean, how are you approaching this at all? I know you're not a gold bug.
Don't remind me that I'm a platinum bug, and I'm so annoyed about it. I'm so annoyed. Like, I've been long platinum for a year instead of gold, and I really feel like I'm embarrassed to be on your talk show. Actually, I'm actually embarrassed because I'm like, people listening this, they're probably all on gold or all chilling at on the beach now, being confirmed. Their thesis has been confirmed that gold is a safe haven. Nothing else is. Not treasuries, not Bitcoin. It's gold, like for the last 5,000 years. And meanwhile, I bought platinum, which is doing absolutely nothing. Having said that, I think gold is showing us the trade after the trade. So what gold is telling us is that the end game is the dollar is just going down the toilet. So don't be surprised if after all this, I don't know if it's going to be after a 20% crash from a Chinese devaluation or whatever. Dude, the end game is that commodities are going to go up screaming like gold at some point. I just can't tell you when, because, I could have told you the same thing in June 2008, just before Lehman. So that's why I think what's really important for the trade after the trade and what gold is telling us is that we need to see like we saw Germany going fiscal. The only way that commodities work is with China going fiscal and with a proper catalyst. Because right now I just don't, right now I don't see it. Right now I just see we're going into a global recession. So it's a bit difficult to be owning too many things into that. Having said that, I still have like some exposure that, I want to have some commodity exposure, because I don't want to be, I call it I call it schmuck insurance. Like, if there is a hyperinflation, you want to have some commodity exposure. Like, I don't think I'm going to sell my platinum. And that's where I am. That's why I said, like,
we'll rename this episode. We'll rename this episode Mining Schmuck Daily. What about I know you love beat up stuff. I mean, are you, but you also have always kind of hated mining stocks. But like, are the gold producers or the miners that something
I was I didn't flag it, but I was buying some miners on Monday, but I flipped them by Tuesday because that's I flipped them by Wednesday. So like stuff like, because that's like if it's a day trading feel, it's kind of a different thing. Like I started buying miners. And I was thinking, oh, you know what? That's a good investment. I thought, oh, that's a good investment. And then they had a 10% pop after the Trump news. I'm like, okay, well, I'm going to sell my miners again. So that's been a two-day tourist trip. But, my concern is basically that, I can buy, I actually ascribe to, like I said about Glasenberg's buy of Glencore. I see that as a long-term investment, something like a Glencore or, the big miners. They're going to be absolutely great because the trade after the trade tells me that these are going to work out. But, like as a small trader that, makes his living out of trading, do I really want to be every weekend worrying that China is going to devalue their currency? It's, I can manage it for a few days nowadays, but it's not something I can be convinced to hang on to. Having said that, I'm sure like the small projects that have a 10x upside are going to be very interesting as well. So that's always it. Like I'm never against that trade. For someone who just mentioned penny stock promoters and penny bond promoters, I mean that's an interesting way to finish. But I do get excited sometimes about.
That's right.
About like the next big project, right?
Yeah, that's right. I'm gonna put your email and your phone number up on the show notes. So all the
it's like a virus. I can't help it.
All the promoters are going to be giving you a call.
Yeah, I know they're going to be calling me again.
This is why I do it.
I can't help it, Katzen. I don't have the power.
That's right. That's right. It's always the one that it's the big winners that keep you coming back. It's like golf, like your shot. You could shoot like shit 90% of the time, but the 10% of the hits that go long and straight keep you coming back. So
yeah, exactly.
Shrub, man, long conversation. We needed a laugh, I guess you could say, but also just kind of some perspective of the grand scheme of things, where this market's heading, where the where the optimism is going to lie here around the corner. Your Substack, you call it a parody, but it's more than just a parody, man. It's educational and informative, and also a little bit of comedy in there. Where can people find you?
I'm on Twitter as Shrub, and I'm on Shrubstack, www.shrubstack.com.
Great. Thanks, man. It's really good to talk to you.
Thanks, Trevor. Always a pleasure.